What up, HyperChange? Welcome to another episode. It's that time of year again. Tesla earnings are out. We're doing a conference call analysis. First, I wanted to give you guys my quick take on the quarter. For the first half of the year, revenue's up 127%, $5.5 billion. Operating losses stayed flat. Margins improved. I thought this was an epic quarter. All hype is on the Model 3, but I think it's really interesting to note that their car business, Model S and X, continues to be on fire. Energy storage is now more than 10% of the business. Gross margins there came in strong at 29%. Automotive gross margins without ZEV credits came in at 25%. An awesome quarter for Tesla's core business, but the biggest piece of news is Model 3 is still on track to hit 5,000 units per week by the end of this year and 10,000 by the end of next year. Incredible moment for Tesla. They're still on track. I'm super hyped about this quarter. Their cash position of $3 billion looks very strong relative to the guidance they gave. A ton to get excited about. The business looks like it's firing on all cylinders. Solar roof installation started. Anyway, let's get right into the conference call. There's no time to waste. The call starts super muffled. You can barely hear what Elon's saying. Nothing happens. It's 5 minutes. They have to finally shut down the call. And then they restart it up and the call actually starts. This episode brought to you by Flower Power IPA. Not actually, but it's just what I'm drinking. Elon Musk's opening remarks to start the conference call. Friday was an incredibly important milestone for the company. In the company's 14-year history, this is perhaps the biggest moment so far. Tesla's goal from inception has been to deliver a mass-market electric vehicle, the Model 3, that's finally arrived. They're selling it to customers. He said it's one of the most important days in the history of the company. I believe him. This is epic. Incredibly difficult production ramp ahead, but they are very confident that they can reach 10,000 units per week by the end of next year. This is huge. That's over 500,000 units per year run rate of the Model 3 by next year. At 50,000 a car, that's $25 billion in annual revenue just from the Model 3 run rate a year from now. That is, Tesla's, they only did $7 billion in 2016 sales, and they're going to do $25 billion revenue run rate just from the Model 3 by the end of next year. This is absurd growth. They remain on track to hit 5,000 units per week by the end of this year for the Model 3. In case of the Model 3, they're very confident about costs. They really want to learn from mistakes of the past. It's no secret, Elon's mentioned this a ton of times, but the Model X had way too many features. This made it very complex to ramp up. The team learned from this, made Model 3 much simpler. They even note in the shareholder letter that the Model 3 only has 100 different production permutations. The Model S had 1,500, so just way less options to choose from. This streamlines the manufacturing process, and this is why Elon is so confident about keeping those costs in line and being able to achieve 25% gross margins by the end of 2018 on the Model 3. One little anecdote, they said at the launch event, 80% of journalists who drove the car wanted to buy one. And the other 20% said they would probably buy one. Elon claims this is unprecedented, and he thinks it's great news. I'm not reading too much into it. And I think this is really key. He thought that Model S and X demand would get cannibalized by the Model 3 and it would be depressed as they launched the Model 3. That's not what's happening. They're seeing Model S and X orders accelerate with the advent of the Model 3. It looks like it's just building behind a tidal wave of momentum for the entire Tesla brand. Their unit sales in the Model S and X were up 53%, even though luxury vehicle sales are flat. So in a flat market, Tesla's growing 53%, even though they're having potential cannibalization from the Model 3. So just so much good going on with Model S and X sales continuing to be strong. Also, in terms of autopilot, Elon goes on to say that they are world-class autopilot engineers, unmatched anywhere, he claims. Classic Elon remark. Model 3 orders net have been 1,800 per day. So they're getting 1,800 new orders per day, including cancellations, since the launch event. That was only a week ago. But I think it's still pretty awesome to note, reservations are kicking into high gear now that they've unveiled the pricing and specs. And this is given the fact they're not promoting the car. No one can even see it in person unless they're in California and near one of the early Tesla employees who got it. Nobody can drive it. It's not test drivable. They're pretty much anti-selling it at all the stores, telling you you won't get it for a year, so you should order an S or X. And still, they're getting non-stop orders for this vehicle. I've said for a long time that I think demand will exceed 500,000 units per year for the Model 3. I'm sticking by that. For the Model S, they had about 20,000 reservations. Now demand is 50,000 units per year. We're looking at a backlog of 400,000 to 500,000 cars for the Model 3. I think end demand will be closer to double that, maybe a little less, 700,000 to 800,000 units per year. Anyway, just me getting excited. Solar roof is installed, but in employee homes. I made a video where the solar roof's at. I was beefing because it didn't look like they had started installations. Apparently they have, but they're only for employees. They still look like they're a little bit behind the ball here, but they have started installations. They have a picture in the shareholder letter. It looks freaking beautiful. So that's awesome. Elon and JB Straubel have it on their cribs. They're already rocking the solar roofs. That's a good sign. But the roofs are really challenging technically. Cost, installation, production are going to be difficult to achieve. It's going to follow a similar production S-curve to the vehicles, where it starts off slow kind of gradually and then swoops up as they figure out how to do production and levels out as demand peaks. Yeah, so it sounds like they're on track with the solar roofs to some degree, more than I thought, and they've started installations, but they're kind of taking their sweet time there because they really want to get it right, and that's a very new product. Batteries making great progress according to Elon. They're going to have a substantial portion of the battery pack for the Australia project built within 8 weeks and unveiled at some conference. Now, I think I got that right, but I'm not sure. But it sounds like they're going to be able to unveil this massive world's largest battery pack for the Australian government early at a big conference. I guess that'll make waves. Who knows? Anyway, he ends it by saying he's really proud of the Tesla team for getting to this point. 33,000 people are working at the company now, achieving some incredibly difficult things. I would like to give my personal congrats to Tesla because even as a shareholder who's doing well with the stock going up, like that's nothing compared to being a citizen of the world, watching the electrification of the auto industry, watching the renewable revolution take place in energy. Like these are all such exciting things that I think it's awesome to be alive at this time for. So shout out to Tesla for making those happen. Anyway, let's get into the Q&A. Consumer Edge Research gets the first question. They don't seem like a big name, so they probably just tapped in really fast to get that first spot, whatever. Anyway, they say congrats on the first deliveries, CapEx spending for Model 3, what are the big next steps in Q3 and Q4? Elon basically says, he's getting a little cocky here. He's like, really hard for us to know. We make mistakes because we're stupid, not because we're trying to mislead. And we're trying to get less stupid over time. So basically what he's saying is we're trying to tell you the best, but we don't know. Like problems will pop up. It's going to be manufacturing hell. Anything could happen. But we're doing our best to tell you that we're going to spend $2 billion throughout the rest of the year on CapEx. No significant unexpected surprises. So he doesn't think there'll be any major like billion-dollar expense out of nowhere. If there are surprises, they'll be pretty minimal. Hopefully that's true. Overwhelmingly, this CapEx is coming from the Model 3, a little bit of the solar roof. Really want to emphasize that we expect the Buffalo Gigafactory to be a powerhouse of solar, and they want to keep their commitment to the state of New York. This has received some flack on Seeking Alpha from skeptics who think that they're sloughing on New York. They're a little bit behind schedule. Elon kind of doubled down here and committed and said that is going to be Gigafactory number 2. We're going to pump out a ton of solar from there. They expect the majority of vehicle production to stay in the US, but they are thinking very hard about where to put Gigafactories 3, 4, 5, and 6. They're going to make an announcement there by the end of the year on a couple more locations. He says it makes sense to build most of the cars in the US, but that also if they're shipping them to California, or if they're shipping them to China or Europe, you don't want to build a car in California, you have to ship overseas. Additionally, there's import tariffs and things of that nature, so it makes a lot of sense, especially for countries like China, which have a little bit more government stipulations, that they build a factory there, partner with a local company maybe. But anyway, more clarity on the Gigafactories is coming by the end of this year. That's something they've been saying. I hope they follow through on it. And then Elon gets frank, and I kind of like this. This is, to me, the most important part of the entire conference call. Tidbit stepping back out of Tesla is, executives, like, it's one thing to listen to what they say. It's another thing to listen to how they say it. Elon's, I think, a very honest and frank dude, and he just tries to tell you the best of his ability what he thinks is happening. And here he gives us some really good insight into Tesla, which is, this is maybe the best I've ever felt about Tesla, to be frank. Last week stressed the hell out of me, but this is the best I've ever felt about the company. So that to me gives me huge confidence, because I know Elon's a skeptic. He always thinks about what could go wrong. The fact that he is so confident that they're the best place they've ever been, which kind of makes sense, they should be. But also the fact, in the market's mind, in my mind, there's so many questions about the semi, Model 3 production ramp, solar roofs, is it even figured out yet? The fact that Elon's already so confident that Tesla's in the best position they've ever been in makes me feel a little better, whether that's BS or not. Also, he wants to clear up that in a prior call, they said the Model Y would be built on a totally new vehicle architecture, but the executive team whipped his ass into shape and said that was crazy, that's never going to happen. So they're building the Model Y on the same architecture as the Model 3 that'll allow them to bring the vehicle to market faster, but they still are doing this R&D on this mysterious new type of vehicle manufacturing process that Elon's hinted to, which is going to be way more automated than anything we've ever seen, way cheaper for Tesla to do, probably going to be done all with robots, but that has been pushed back a little bit. Elon just finishes the question by being like, I'm really thankful to the people who've invested in Tesla. As someone who's been a longtime Tesla fan, investor, I don't know, that means I like that. I don't know how many CEOs give a heartfelt thank you to their investors, so that's kind of cool. Anyway, Deutsche Bank, something about artificial intelligence. Elon gives a long, boring answer about everybody knows he's freaked out about it. Deutsche Bank gets into the real question. Elon mentioned that there's going to be 25% gross margin in 2018 for the Model 3. What is the production run rate to get there? Fair number of battery announcement, new techs. What's the assessment there? Is anyone close to a breakthrough? Elon starts out by answering the battery question. He's like chuckling, like, if you have a battery breakthrough, send it to Tesla. We're the world's biggest buyer of lithium ion batteries. We'll test it. Like, you want to work with us if you have a battery breakthrough. Basically, he's saying all these battery breakthroughs are hype. Doing something in a lab is great. Scaling it is another question. Optimizing costs is another question. Getting a new tech from these labs into production is 3 to 4 years out of the way. But then Elon goes to say after he's pressed, oh, this is confidential. I can't talk about it on the call, but I'm going to give you enough hints to get excited. There could be the most significant battery breakthrough in time. It sounds like he's in on it. It's in the lab. It's not quite working in the lab, but very promising in the lab. Then it'll be in high production, then cost optimization. It's 3 to 4 years out from actually hitting the road. But there is a potentially exciting battery breakthrough in super confidential R&D that Elon's working on. On Model 3, when they hit a steady state of about 5,000 per week, they're going to hit a 25% gross margin. I think that's interesting. And then they go on to clarify saying right when we hit 5,000 per week, we're not going to be at a 25% gross margin because we need to hit that scale and then optimize. But I think it's interesting to note he said 25% gross margin at 5,000 per week, not 10,000, because I personally think they're sandbagging that gross margin a little bit. It's going to get a lot closer to 30%, maybe even higher when they hit that 10,000 a week run rate. The last thing he notes is part of the reason why they can ramp Model 3 so much quicker and more profitably than any other vehicle that Tesla's done in its history is because suppliers are taking them seriously. This is something that I've mentioned, and Elon just hammers it home on the call, saying we were working with like B suppliers and their B teams, and no one thought we're going to sell cars. For Model 3, the industry's woken up. They're working with A suppliers and the A team at those suppliers. And this was a little bit of like Undoing Project, a book review episode I did, counterintuitive human logic. The fact that all these car supply companies thought Tesla would be nothing, and they made it super hard for Tesla to get the parts they needed originally, made it super hard to scale, and gave the market the illusion that Tesla was having a difficulty time scaling. Now that these suppliers are willing to work with Tesla, putting their best foot forward, like, it makes sense that Tesla could scale so much quicker because they're working with such a better caliber of suppliers. So I think that's really important to note, and that's one of the biggest differences in the Model 3 from the Model S or X ramp is that the suppliers are taking Tesla seriously, as they should. JP Morgan. Just thinking about liquidity, now have about $3 billion in cash, guiding for $2 billion in capex in the back half. Apparently, Elon has some rule where they need $1 billion in cash cushion to keep things safe. Would it make sense to do a raise? Elon's basically like, operating cash flow is going to be significantly better in the second half of the year than first half. They do have that $2 billion in capex, but they don't think they're going to need to do an equity raise, although they may need to raise debt, or they are thinking about raising debt. So they also make a note that they're getting much better payment terms for suppliers for the Model 3. They can pay with 60-day lag. There's an interesting trend going on where Elon describes this as nirvana, where we get paid to make the car before we pay the suppliers. This would allow Tesla's cash position to grow as production grows, where Tesla's going to be able to collect revenue up front, deliver cars within very quickly, and then pay the supplier after they've already collected that revenue. Therefore, cash pile grows as deliveries scale, so that's going to lessen their cash needs. Also, the follow-up question is that desired cash cushion of $1 billion going to go up or down as the company grows? Obviously, the answer was it's going to go up. As our balance sheet grows, we're going to need a bigger cash cushion to keep that in line with the size of the company. Nothing there. Morgan Stanley, Adam Jonas, used to be my favorite Tesla analyst till he didn't reply to my email that I sent him. So Adam Jonas, if you're watching, reply to my email. Otherwise, you're not my favorite Tesla analyst anymore. So basically his question is, when are we going to hear more about how much safer Tesla's cars are because of these self-driving features? And Elon's answer is, there's no question that the autonomous cars can be much safer than the normal cars, but we also want to keep customer privacy at the forefront, and basically we're going to keep working on this. We're going to keep steadily releasing autonomous features, making the cars safer. Follow up on SpaceX. Adam Jonas loves to ask about SpaceX. I think he's overkilling it here. Basically, he says if there's any crossover between what SpaceX is doing and technologies developed there being used to accelerate Tesla's mission. Elon gives an example of all the time the teams are talking, which I think is kind of cool. Like the fact that Tesla engineers can call up the most advanced rocket company in the world to get advice on materials and engineering, and according to Elon, mass optimization is I think an edge. And so basically SpaceX and Tesla teams engineering are working together to scheme on some problems. UBS, he like kind of laughed. It sounded like he was surprised they even took his question. And it kind of made sense. Actually, no, his question was all right. But he's basically like, okay, so how do you come up with these estimates of how many superchargers you need? You say you're doubling the amount of superchargers you have, but with the Model 3, you're more than doubling the amount of cars on the road. So wouldn't that mean there's going to be some supply constraints with superchargers? Elon says, actually, we're tripling superchargers between now and the end of 2018. We will be confident that will address the needs of the SX and 3. JB steps in with some interesting commentary saying that actually the superchargers in between cities are relatively underutilized. So although they are expanding capacity there, they actually do already have room on their current network to bring on additional cars. What about charging time? That's UBS's follow-up. Charging time is staying consistent. JB hops in with another interesting insight here, which is Tesla's always researching new charging times, and they have been able to charge a battery pack in 15 minutes, about half the time that the current supercharger does, but that's a trade-off with the overall life of the battery, with the cost of the battery, and they're making the cognizant choice to choose on behalf of consumers that even though we could charge your car faster, there's a bunch of other trade-offs you're not going to like. So we think this is the sweet spot of charging quickly but still offering a great experience and value to the customer. So a little tidbit of Tesla's culture and kind of like the way they look at making decisions like that. So I thought it was cool. Bernstein, delivery of 20 units for validation. Basically, he wants to know, okay, so you're delivering all these first cars to employees, and everyone's like, oh, that's so smart, because then if a problem pops up, you'll be able to fix it. But he's saying, how much time do you really have to fix these issues if a problem does pop up? And Elon and JB kind of explain here that they're not really looking for major issues. They've already debunked all the major issues for Model 3. They're looking for issues that pop up when they produce 1,000 vehicles, like a fraction of a percent of those are going to have minor issues that are due to a combination of factors, like some supplier's part teamed up with some other supplier's part when they like rub together for a certain amount of miles, like wears out faster than expected. So then you do something in manufacturing to put like a little rubber piece there, like all these little kinks they want to work out quickly with the customers. And basically they want to learn as fast as possible and have a very tight feedback loop with these initial early adopters. And he also said it was kind of a reward for all these people on the Tesla team who've been working so hard for so many years on the Model 3 that allowing them to buy it was like a kind of a, like, I don't know. I just think that's really awesome that they give the employees who built it the first shot to buy it. And they didn't offer a discount. Like, this isn't a they don't give employees any discount. They're buying it at full sticker price. Goldman, Tamburino. He asked a question about, can you give us more color on what the Model 3 looks like? Oh, forgot something before Bernstein. Elon does update the net reservation count for Model 3s. This has never been officially disclosed for Tesla. It was disclosed on the call. I was overshooting it because I'm an optimistic Tesla fanboy. I thought they were closer to 600,000 net reservations. Apparently, they're at 455,000. And I don't know if I heard that right, but I think that's what I heard. They had 520,000 gross reservations. The net gain since launch event has been 1,800 per day. They said a small amount of marketing could drive this way higher, but they just don't need to increase demand right now. It's all about how much they can build them. Like, they have a year of backlog on this car. And like I said, once again, Model S only had 20,000 initial reservations, but annual demand ended up being 50,000 cars. So I think the reservation backlog is actually only a fraction of what end annual demand will be. And if we do that for Model 3, then we're looking at closer to 1 million vehicles for annual demand. I don't want to say that that's going to happen, but I'm just saying, if you extrapolate what happened with the Model S, that's what would happen. And back to Goldman, he's asking gross margin. Tesla's guided that gross margin will dip below 20% in Q3 because the gross margin on the Model 3 units is going to be negative as they scale these very early initial production units. So he's basically saying, how far off is that? Honestly, not too stoked on the answer here. Basically, they were super vague and they said this is going to be a 1-quarter dip as they figure out production. But my guess is this is Tesla management telling you we have no idea what gross margin is going to be. It's going to be a really tough quarter. It's manufacturing hell. I wouldn't be surprised if it was 14%. I wouldn't be surprised if it was 16%. I wouldn't be surprised if it was 22%. And this is across all Model S, X, and 3. But I think it's kind of irrelevant, and you need to wait to see Q4 2017 and Q1 2018 when they actually get a normalized run rate going to really analyze what the gross margin is going to be. And I know all these shorts and skeptics are going to say Tesla's dying and they're ruined when the gross margin is low next quarter, but they're just not looking at this rationally. Like, any car with this big of a production ramp, this much capex, this much infrastructure is going to start at a super low gross margin until you hit scale. And so that's what's to be expected. Barclays, this is awesome. Operating expenses are expected to be flat through the remainder of the year. So Tesla, even though revenue is about to just soar with Model 3 deliveries, expenses are flat. And this is because of the beauty of Tesla's business model. They already have all these stores. They're already open. They already have all the sales reps there. All they got to do is slide the Model 3 into the stores, and then they can start selling them. They can increase the productivity per employee, per square foot. Like, the economics of this business are so great with each incremental new product because they already have all the sales channels. This is where we really get to the fun part of Tesla's long-term business model, where with the Model 3, their entire store infrastructure gets super profitable. I think the entire operating structure of the company really shines through when the Model 3 comes out because they don't have all these incremental expenses. They have no marketing, they don't do marketing. I just think this is awesome. I don't know if they're actually gonna be able to keep expenses really flat as they go through this ramp and grow all their other product lines, but it's interesting to note that Tesla's guiding, hey, our SG&A and our R&D are gonna be pretty flat, even though our revenue is gonna soar. This means excellent things for profitability. Oppenheimer says, what is the conversion rate of customers who are coming in the store looking for solar and storage? Kind of what you think here. The Tesla executives nailed it with the vision of SolarCity. If you're buying an electric car, one of the first questions you're going to ask about charging is, where's my energy coming from? That beautifully leads into the conversation of, here's our solar roof, here's our power pack, and the employee's already in there selling the car. So instead of this direct door-to-door sales model that SolarCity was using before that was super expensive, they flipped that entire business model on its head, just plugged it into Tesla's store pipeline. Once again, Tesla's business model of having these stores and this touch point with the consumer is coming back to benefit them in so many ways. Of course, people buying electric cars are interested in learning about solar roofs and batteries when they go into the store. So it makes total sense that they're doing really well there. They go in to say that Tesla's sales per square foot are some of the absurdly highest in the industry, and I believe them because they have a tiny store. They're selling a $100,000 car. They sell one. That's a pretty good sale. The other thing is they're working on an app that's going to integrate the Powerwall, the solar roof, the car, basically tell you how much energy you have at all times, how much energy is in your car, how much energy you're burning at your home. And they kind of want to integrate this all-in-one energy and transport app, which is going to be branded through Tesla. And that's kind of fitting into their vision of having the stores that sell everything, having the app that controls everything, and being that brand for sustainability in terms of transport and energy generation. Guggenheim asked about personnel changes for Autopilot. Their big, one of the guys who came from Apple that looked to be a leading edge Autopilot guy left. So he's basically asking about that in a roundabout way. Elon's basically look, our average executive tenure is above average, but people leave. Sometimes it doesn't work out. It is what it is. Also, Guggenheim then asked, are we still going to be able to do that self-driving trip all the way from LA to NYC by the end of 2017? Elon is yes, I think I probably will be able to, but I might eat my words on that. And if it doesn't happen at the end of 2017, it'll happen early 2018. Either way, I think that'll be a really cool moment just for press in terms of how cool self-driving cars will be. I don't think it matters whether it's this year or next year, but anyway, that's it. That wraps up the conference call. My thoughts on the quarter were just this kind of reiterates the bull thesis. I'm waiting for them to say we can't hit 5,000 units per week by the end of the year. I'm waiting for them to, say we're going to need to raise more money, but that doesn't happen. I thought Model S and X sales were going to get cannibalized by the Model 3. That's not happening either. There's just a ton of good news here. And I think the biggest X factor, and kind of reading in between the lines on this earnings call, is that Tesla's going to become a very profitable company if the Model 3 hits the gross margins and scale they think it will. The operating structure of the company, because of their unique retail model, keeps expenses really fixed while revenue grows exponentially with these new products. And I think that's going to mean really exciting things for the earnings power of this company. And that's going to validate a lot of the bullish people like me who've been saying since day one that Tesla's going to be the most profitable car company because of the unique business model they have. And I think we're going to actually see real evidence of that next year with the Model 3 at scale. And that is why the stock's up after hours. That's why people are amped, because the vision is really is coming true. So super exciting day for Tesla shareholders. Another quarter. I'll be back next time. That's HyperChange. Comment. Let me know what you think. Subscribe if you haven't already. I'll make another video when the 10Q comes out with a deeper dive into the financials of the quarter. That's HyperChange. See you guys next time. Peace.